Good morning. Hope everybody had a great holiday. So the markets moved up into the holiday, and we've got a kind of a wide range bar here. We spoke about this last week in the room about accelerated type of a move, which is going on here. And we've got the end of the month, beginning of the month seasonality kicking in. So for several reasons, it appears that that'll play out. We'll see. So as always, the prior day's low is our first reference point of support. And it's on the SPX. I've marked off that low, which is a substantial amount away based on day-to-day bars. Remember last week, as we were reviewing pre-market, we noted that the ranges were contracting as momentum was slowing. And one of the matter of fact, I guess, obvious things is that it's easier to break a prior day's low as the ranges contract. Well, that happened on this day here when it initially opened lower and just peaked under the low and recovered right away. And buyers took off. So why did that happen? Well, the seasonality, as ranges begin to accelerate as this did and ranges contract, traders do anticipate a retracement, especially after a bar like this, and could get short. So this in part could be some short covering. And then just regular buying, pushing it up as it got through this 4,300 strike. So now we've got a big open interest at 4,400. So they're betting that it's going to go up there, which will reinforce by the dip, which has been going on for quite a while. So you've got right there at 4,350. We'll see if that holds support. And what's that number there? Well, you can see the number right here, 4,325 is the number. And so 4,350, see if it holds on any retracement back there. 4,375 has some relatively large open interest. And then the biggest is up here at 4,400. So there are bets that it's going to go there. Now, what would stop that? Well, I think a close under this wide range bars low would certainly put that in doubt, because not only do you have a break in an initial level of support, if it does close underneath there, unless it has an immediate recovery, it's likely to pull back further. And the further prices pull back from a target, well, unless you have a meaningful reversal, the less likely it is it's going to get there because it's got further to travel. So this gives us an objective bias as to, well, what if this happens? Right now, it looks like this is going to happen, right? It's going to continue to move up into that area unless it fails. Our factory work says, well, okay, fine, as long as it doesn't close below this bar or down at that bar, that has a decent probability. The further it breaks under it, the lower the probability. All right. So as far as SPX goes today, the furthest you can go up where there's some premium right now is 4,370. And was that far enough away for you? I don't know. I think for me, I want to see some kind of price action at the beginning. I'd like to see, hey, if it spikes up there and comes in, maybe get a little further away. And down below, you got to go down to like 43.15, which I think makes sense. And you might even get a little bit higher than that. All right. So if we do get some retracement, we're going to look at the futures to see where they're at. But if we get some retracement and that premium picks up down at that level, 43.15, I think it makes sense. And I think at some point, it's just normal to think that some kind of retracement is likely intraday. Not that it would collapse or break this move higher, but as some kind of retracement occurs and you get closer to a strike with a premium, you believe to be safe, okay? You believe it to be a safe place, and that premium increases a bit, the trade becomes more attractive. And, so far, unless, as I said, something nasty happens, a big red bar coming down, the likelihood of breaking under this bar's low seems relatively low. Now, the good part about this and our discussion in the green room last week was, yes, this is accelerating. And if it continues to accelerate, that very likely increases the probability that there's going to be a bigger pullback than what we've seen in the past, like this or like this. However, the further it gets above what we call minor support and away from major support, the more it can pull back without damaging the trend. In addition, this is happening after a breakout on the weekly time frame that consolidated for about, looks like about 6 or 7 weeks or so. Right. So this is a bullish uptrend. It's got bottoming tail bars. You got a red bar ignored. So everything we talk about applies to all time frames, more meaningful in a weekly than it is in a 5-minute. Common sense. So this, was the start of a move right after the reversal. Can it get up to 4,400? I think it's easily within striking distance based on these range bars of continuing from last week. So again, we'll take it a step at a time. Daily chart, the prior bar's low is our first reference point of support. There's really no support on the hourly time frame other than that bar's low. So it brings us back to the concept that we discussed last week as prices began to move up of creating support. Now, creating support after an initial blast off is highly likely, and that it does that. Creating support at a same high level, meaning with the void above and creating it up here, is less likely. There's more common sense analysis. That being said, on the hourly chart, you've got this support level here around 43, 45-ish or so. Keep an eye on the 15-minute chart. Pretty minor, could break that, does no damage to the hourly, no damage to the daily either. All right, so futures, they are down a little bit, really not doing much of anything here. Just kind of waiting for the open. I haven't adjusted this up. I'll stick it up there and bring this up here as our support level. And we've got this little shelf that's been forming here. So there's our support. So if this starts to break, right, going down, and just looking at this and relating it to SPX, going down to 43.15, you see this little shelf that's here of support. So as this breaks, look, if it was to waterfall down here, the premiums here would really pop, and you could go down to, just relating this to SPX, go down to 4,300, which would be a significant support level. But in reality, it shouldn't even go down there based on this trend. So if it does, something's wrong. Right? Could you go over market breadth and depth? Well, those are two different subjects, Arun. But market breadth, which we covered in the letter, and this is expanded here. I covered this. Where's my chart? Hold on. I've got lots of charts here. All right. I assume you can see that. You can see this? So I dragged it from outside the, no. Okay. Attach it. Okay. So the breadth under historical market conditions, this should be up here after this run in the S&P. All right. It's not. It's around 0, which tells you, which I think most of us know, that the breadth, right, what's driving this market higher is a few stocks, Apple, Microsoft, and such. So there's a lot that isn't participating. So one of my comments, this crazy phone, over the weekend was, well, what about this accelerating higher in a blow-off kind of a move? Well, we reviewed some ETFs and there's stocks that have underperformed, that if the market is going to accelerate, those could bring up the rear or play catch up, as we call it, and could push this up, this breadth up into an extreme where sentiment, which is already at an extreme, right? And this moves up and we're going to get a sell signal. And should that happen, I think, just based on accelerated type of moves, that the correction from that point would be larger than what we've seen in the past. Well, we'll see how that all plays out. Right. All right. So let's continue here. We've got time. YM up against resistance here. Right. Had that monster reversal. I mean, this is just insane. I mean, when I say things are insane, it's just from looking at decades of charts and seeing, this topping pattern that collapses under support to immediately reverse back up again is not normal. Right? After this wide range bar and move up, I would say this kind of price action is normal for what we call a measured move. And it's kind of met its destination coming up to that resistance area. So we'll see if the Dow can go sideways here. We always do, looking at different markets and how one reacts and measuring relative strength and weakness. That's a pretty big, potent reversal on the weekly time frame. NASDAQ, we know, has been leading, and it was the underperformer during this corrective process, which it led the way down. But unlike the weekly chart of the S&P, this has been going up where we've got what appears to be, at the moment, a wide range bar ending. So we've got a pullback, bottoming tail bars, and move higher. And then this is the widest bar. Now, one of the things that I've learned over the years is that when you initially look at a wide range bar like this, and it does communicate a wide range bar ending, wait for the next bar to complete itself. Right? So this is just starting, because I've seen times where it's like, oh, there's a wide range bar ending. And the next one is like, holy cow, that one's really wide, meaning, it's much bigger than that one. And then it's like, well, that must really be the wide range bar ending. So we'll see where this week brings us. Short week, of course, but we've got the beginning here. And, we've created support by the dip. How do we interpret that? Right? Void. Can it create support? Yes, it did. It's a pivot. Is it meaningful support? Kinda. It retests it. Bottoming tail bar that breaks the low. Now I've got two pivot lows in the same area. That's significant. So if it breaks below here, well, for intraday traders, that's a problem. Right? Because now buyer stepped up, that fails. Now they get out, trade isn't working, and so on. Russell, just a mess. The thing just fell like the proverbial rock off the 10-story building there. Looked like it could keep going up here, but let's see if this is just a consolidation at the top of the range. Now, we talked about this, just going to the ETF last week, about this big trading range that's been going on all year. And when prices come back up, so this time was a relatively shallower dip and a deep retracement into here. And if this could possibly be a congestion area at the top of the range and it breaks out, this could really be, the second half of the year winner, because it's really done nothing all year so far. And let's look at yields. Russell 2000 put spread. Well, McGraw, it's always about how far away. So here's a bottoming tail bar. Here's a little support. If it's down below here, of course you're going to the end of the week. So with that many days away, not like it's 0 day to expiration. So you want to do it on the futures. 2200. I had to take a double look at that. Did you really write that? Yeah, that should be a no-brainer unless, you know, something disastrous happens. I can't imagine it going down to 22, well, 20, 2200. Yeah. I can't imagine why it would go down there. That doesn't mean it won't, but there's nothing on the chart. Right. So what creates my imagination? The chart. This chart doesn't suggest the potential for a move down to 2200. So I would say, yeah, but, you know, but hey, if tomorrow this bar is down here, we're going to change our opinion about that. So, you know, day by day. That's the whole thing with credit spreads, is that you could have the most potent setup, right? So let's imagine this move up here, and you said to me, "Hey, how about a put spread down here below 2100?" I'd say, "Yeah," and it expires in 2 days. That sounds like a no-brainer to me. If you said, "Well, if 2 weeks?" I'm sorry, I really don't know. You know, that's up to you. It's the same thing here. 2200 seems like no way it's going to happen. We'll see in a few days. All right. Bonds inching up, which means yields are coming down. And here they are. They're near this prior low. And look at this weekly chart. And that's what Dan calls a bull sandwich. Right? The meat's in the middle, the bull. And that says it's going lower. Now we know what brought the market down was these yields coming down a couple of weeks ago, and the 5-year going up. So now the 5-year's down a little bit, but no damage really done to this pop up here. So what you want to do is, you can't focus on this for intraday trades, but why not set an alert up in this area? Because if this starts perking up and this 30-year starts going down, I mean, this bullish scenario, you can see the 10-year already moving lower. The closer the 5-year and the 10-year get together, the more the market's not going to like it. And so set some alerts. Right? If that 5-year is going up and this is still going down, I think the market's going to take notice of that. And crude oil still doing well. You know, we know that there's that resistance at $75. It's kind of getting rejected there a little bit, but looks okay. Gold, right, last week I pointed out the potential for a breakdown bar failure, right, which was this break bar and then the inside bar, and it took out the high, and that is moving up. Right, profit taking coming in here. Silver, right, coming back in as well. And Bitcoin, it's kind of hanging here, forming a little trading range again. So we've got a trading range, right? A big trading range, pivot low, pivot high, and it's forming a little trading range. I don't have a pivot low yet, but it's forming a little trading range here inside of a big trading range. So from this time frame, it says stay the heck away and wait for it to either break down, because it's
Yeah, Greg, lost your audio.
okay. It should be back. Something's going on here.
Yeah, it's back.
Yeah. All right. So what I was saying is we've got a trading range, a larger trading range, pivot high and low, and a smaller trading range inside of it. So at support, buyers are stepping up. We've got red bars ignored, but we've got a green bar ignored and created a pivot here. So the pattern suggests just staying away. You know, and if it can clear this high, there should be more buyers coming in. If it breaks down here, those that have been accumulating are probably going to throw in the towel, and then it goes lower. So just to stay away for now. And bringing up the rear. So from the bullish point of view, what we want to see are the transports, which have a little void moving up there. Things like materials that have been underperforming. The symbol eludes me for the moment. I look at it every week or several times a week, but you'll see it popped up like this, XLB, XLB. So from the bullish point of view, something that could bring up the rear. It didn't participate last week, but the underperformers can become the outperformers as they play catch up, if that's going to happen. So set an alert at Thursday's high. And if this is perking up and the markets are going up, this may just have an accelerated move into the void above. So, in situations like this where prices are extended, there's risk on the long side. Here, where there's significant support, the markets are holding up relatively well, right? Meaning, okay, they're not flying like they were, but they're not going down. And these underperformers really start to see money flowing into them. So there's a thought. Well, we'll see what today brings, and in this shortened week. All yours, Dan.
All right. Good morning, everyone. Yeah, nice long weekend. All right. So all our opens are fine. I see ETHE talking about. Wow, look at Ether. Oh, wow, Greg, do you remember this was the one we sent out a Telegram alert at the 200? Amazing. That Telegram alert was the low. Our little glop oil stock up. Google, we did a put spread. And I also gave it directional. That was a beautiful gap breakout. I didn't give the exact ones, but I sent out an alert saying just buy it. Buy calls or debit spread. Let's see, the open seemed fine. Our Amazon put spread, that's up nicely. We did that Friday into the close. As Greg talked about the breads, some of these, I put in the letter, I read in Barron's that the 5 big stocks, I think including Microsoft, account for like 24% of the S&P 500. So with breadth being 0, as Greg showed you, and the spiders at all-time highs, that's because they're moving up on the backs of these just a few generals. JR, Massey, LSI. Massey looks higher. It's not a 1, 2, 3, just because Friday's bar is higher, but it's a continuation of a bullish engulfing reversal and a strong uptrend. LSI, IFF. LSI, yeah, it's a breakout on a strong trend, sure. Yeah, look at, what this weekly reminds me of? I got an email from somebody last week, and it's like, damn, how I can't buy anything with weekly so extended like this. I'm like, well, we're not trading the weekly chart. Yes is extended, no question about it. Look how far from the 20 it is. That might be the most, I'd have to go back. But on the bullish side, well, I've got pretty extended right here, but it's extended. I get it. But we would be trading the daily chart, and that's a beautiful consolidation into the 20. IFF. No, see, that one I like the other one better because I don't like all these tails and wide ranges. it looks higher and the weekly's not as extended, so that's a plus over the other one. But you would have to give this one a much bigger stop. SGH. Yeah, this reverse head and shoulders gap breakout, 49.50. Yeah, yeah, that could go to 52 to 54. Put that on the list. That's a gap breakout. Yeah, so it is gapping up. Put it in a window and see how it sets up. But the daily's too erratic for me. Someone asking if Q's is still a good put spread. If it's under Thursday's low with danger if it takes out Friday's low, but you're just getting on board a moving train. This was the no-brainer entry right here. June 22. You have these two inside bars, bottom and tail, and then a closing breakout. China's after locking down their companies again. No, that's Diddy. Diddy, new IPO, Chinese Uber or whatever. It's getting whacked here. Wow, that's gapping down to all-time lows. So KWeb, yeah. If it closed strong last week, I would have said it's a possible bottoming pattern. But now it's gapping all-time lows. So that's a stay away. Marin, I don't know what is up with this stock. Gapping at 27. I mean, I personally would never hold this crazy thing overnight, but if you can get a day trade set up, it's very strong. UBX 490. Looks like a mess. YMM is another one of these Chinese things, I think. Recent IPO, gap in all-time lows. That's a mess. DDL, recent IPO, it's a mess. I think I read also in Barron's that there were 19 IPOs last week. That's a lot of money, Yeah, Austin. So we'll go through them one by one as always. But yeah, that's the rule is 5-minute high or low on anything, regardless of its gapping. But unless it's excessive. Okay, got all those answered. HYRE, CBLX, yeah. Tiger here getting whacked. What's up with that? CDLX. Yeah, CDLX. This one was a call spread. So that one's fine as a call spread. HYRE. Yeah, this one looks great. Yeah, you can short a 5-minute low. Yeah, Qs are on fire. Look at that, just busting moves to all-time highs. Look at Facebook. Yes, I mean, this is just like this is a continuation of Friday. Crazy, just crazy strength. Look at this move. Wow. That was the most beautiful setup Friday. Ooh. And plaque alarm, TGI alarm. Yeah, TGI looks good. SLCA. SLCA I had as a bullish trade, but it hit the low alarm. Yeah, this is just what feels like Groundhog Day to Friday. You know, the diamonds and IWM are just weak as can be, and it's everything's